Romspen halts redemptions and 40% of its borrowers are not making payments. This is absolutely insane. We were just talking about pensions yesterday, and God knows how many pensions are invested in this company. So let's get right into it, see what's going on at this place. A significant share of borrowers have stopped making their payments, the lender says. Okay, Romspen managing partner Derek Jenkins said that the share of borrowers that stopped making interest payments was approximately 40%, much higher than the lender's acceptable range of 20 to 25%. So that isn't like some sort of conspiracy theory. That's actually what the managing director came out and said, that 40% of people, 40% of the borrowers aren't making their mortgage payment. So what does that leave their assets worth? And obviously, again, this is one of those companies that was giving like an 8% yield. So again, last year when interest rates were rock bottom, pension funds would have poured into stuff like this for that yield, exactly like what we talked about yesterday. So it's absolutely crazy. We're being very selective in what we finance at this time in Canada. But yeah, because basically they've had to freeze redemptions, because if they don't, they're going bust because they can't sell the assets. They're trying to fire sale the assets, and they're not going to be able to do it in time because the market is so illiquid, because rates have gone higher. And basically all these companies, and it's not just this company, but loads of companies are positioned in a way that they are not positioned for this high rate environment. So all of a sudden it's hit them like a slap around the face, and they really don't know what to do about it. So pretty insane. So let's jump over to BNN and see what they're saying. You know, probably on CBC, they're just talking about some stupid news story right now, and then right at the end they'll go, oh yeah, and this $2.8 billion real estate mortgage business halted redemptions. And in other news, the weather's going to be, this isn't even going to be covered in the mainstream media. It's just kind of crazy, really. Okay, so Canadian real estate lender Romspen Investment Corp has halted redemptions on its largest fund after a number of borrowers have stopped making payments. The move underscores the growing stress in the nation's real estate market as sharp rise in interest rate changes the economics of commercial projects and disrupts the housing market. Makes it illiquid. People can't afford to buy these units. Commercial real estate was collapsing anyway. You just have to look around, and I mean, it's office buildings everywhere, for lease signs all over the place. No matter what city you're in Canada and the US, you're seeing this. So commercial real estate has just been a disaster, and the way a lot of these businesses got through when they haven't had the rents and everything was by refinancing the real estate. And essentially that has just meant the bubble has sort of expanded. And eventually, I've talked about it many times, about how this commercial real estate collapse is going to be one of epic proportions, because you cannot hide what happened during the pandemic, which was just nobody working in the office. And yes, a lot of people have gone back to the office, but still a lot of companies have downsized. They've gone to smaller offices, hybrid models, and you just can't, those changes, the whole entire financial services sector is just not geared towards that big of a change happening in such a short period of time. It just can't absorb those shocks. And eventually we're going to see those shocks play out, and that's starting to unravel right now. So it's really interesting. It's among the largest private players in that business in Canada. So basically it shows you their asset split. So they've got 9% in Texas, 13% in other Canada, 14% in British Columbia, 20% in California, 22% in Ontario, and 22% in other US. So they've got all the bubbles covered there. California, British Columbia, Ontario. Oh, isn't it just fantastic? I mean, It's so sad, really. The reality is, it is really sad what it's come to, because these are people's pensions that are going to be wiped out as a result of all this stuff. So just insane. Private lending funds have gained popularity among investors hungry for yield during the era of rock bottom interest rates. But mortgage finance vehicles have had a difficult year as rates increase. The rise in borrowing cost is also hurting developers as they seek capital to build new projects or refinance existing ones. And basically, these developers, a lot of them are leveraged just like they're leveraged in China in a similar sort of fashion. So when they can't sell the units, they get into trouble because then they've got to start making payments and they need to sell a certain amount, and they can't sell a certain amount, and then the payments come due and they can't make the payments, so they just go bankrupt. We've already seen a couple of companies of this happen to a couple of companies. One was that company in London, and there's been another one since then, I believe. So it's kind of crazy. Romspen told investors it has still outperformed other asset classes this year with an 8.2% trailing one-year return as of June 30th. According to its website, we are confident that we will manage through this challenging phase and achieve reasonable long-term results for investors, much as we have in past periods of adversity over Romspen's 50-year plus history, the letter says. But according to Google, anyway, they've been halting withdrawals for a while. I mean, I just so happened to Google the company, and the top review there was 3 weeks ago. This seems like a very sketchy and risky investment. My dad has been trying to get his money out for years, but they are unwilling to release his funds. My dad is retired and needs the money. It is a shame these type of funds are not regulated. I feel like my dad will never see a cent, and neither will any other investors. So there you go. That's right from Google. You only have to Google these companies to find out what their reputation is really like. So absolutely mad. And then another thing I want to show you, we were talking about the pension fund yesterday. Well, this is Ontario Teachers Pension Plan. And when you look at the split of their portfolio, they've got a lot of it in real estate. In fact, the same amount as they have in bonds, which are like liquid, safe assets, a lot of sovereign bonds, treasuries, Canada government bonds, and literally they've got $200 million in real estate, mostly commercial. Look at all this they own. All these places they own, some of them 100%. And I can't imagine those places are going to do very well during a recession. A lot of them are malls, commercial office towers, and then it's absolutely mad. These pension funds must be losing so much money, and we're just not hearing about it yet in the mainstream media. And it's kind of crazy. And then you can see on their website, led by innovation, grounded in experience, and then it says that they've got $3.2 billion aggregate assets under management, and they've returned a 7.4% net return average annualized over 10 years. So that's quite crazy in the environment, but essentially they built this around the bubble. But the bubble is bursting. That's what a lot of people just don't understand. So I was going to explain this in a completely separate video, and maybe we will go over it if you want it. Let me know in the comments. But basically, I wanted to go over this and show you this because essentially you can see here how the Taranet house price index, this is a percentage change month to month. And you can see here, this goes all the way back to 1999. And you can see it is currently worse than 2008. And now, as we know, like Canada did suffer through 2008, but it was relatively unscathed compared to many other countries. I visited Canada in 2012, 2013, and I couldn't believe how it was performing compared to the UK, and that was part of the reason why we moved here. The UK was still absolutely just in a terrible state after the financial crisis. But Canada built a bubble on top of a bubble, which has just turned into this super bubble, essentially. And you can see that that is not good where we're at right now. 2022, this goes much further than 2008 to the downside, and it's got a long way to go, and there is a lot that needs to be bled out of this system to get back to a new equilibrium and to get back to the trend line, which the reality is history tells us that's where it's going to go. And that is going to make some people cry hearing that, unfortunately. But it's just the reality. And you know I'm just going to bring you the reality on this channel. So anyway, if you enjoyed this video, you might like that one there. Maybe you'll like that one there. And I will see you guys around in the next one. Thank you for all the support. And I will see you on